Hi, and welcome back to the channel. This is Gary Singh. Today's video is about which Bitcoin ETF you should invest in. On January the 10th, there were 10 Bitcoin ETFs that were approved by the SEC. For somebody who is a starter or somebody who's new to this crypto space, it might be an overwhelming decision to make. Which of these 10 Bitcoin ETFs to put your money into. So we're going to discuss the pros and cons of the various Bitcoin ETFs. And also, I will be disclosing where I put my money and which Bitcoin ETFs I've invested in. But before we get into that, let's take a minute or so to discuss what the market looks like for Bitcoin today. If we look at the chart here, you can see that the last trading price is $67,657 or so. We started the day at about $62,000. We're up $5,000 for the day for the price of Bitcoin. So this is looking very bullish. There is a potential that we could break all-time highs today or tomorrow. The all-time highs are $69,000, and we're not that far from that figure. Now moving on to the topic of what this video is about, which is which Bitcoin ETF should you invest in. I have a list pulled up here of all the Bitcoin ETFs. There's, I believe, 10 of them. So most of them are between 0.19% and 0.25%, the average being about 0.25%. The outlier here is GBTC, which is why you're seeing billions of dollars of outflow from the GBTC fund. Even though 1.5% may seem like a small figure, if you hold your money in this fund at 1.5% fee over the course of 5, 10, 15, 20 years, that could be a significant portion of your balance that gets eaten away. And that's why you're seeing a significant outflow of money from the GBTC ETF. I think for me, the two big things that I looked at when I was investing my money into the Bitcoin ETFs, and I had these 10 options available to me. The first was the fee, obviously. Based on the fee, I ruled out GBTC, and so I had these nine ETFs that we're looking at that seem like potential Bitcoin ETFs in which I would put my money. And I narrowed the list down even further. I wanted to stick with some of the bigger names here because that comes with a certain level of trust, a certain level of reliability, and a certain level of accountability on the part of these firms when they're holding billions of dollars of their clients' money. And so I ruled out some of these smaller ones like VanEck, Franklin Templeton, Wisdom Tree, Invesco, Valkyrie. So I kind of narrowed down my list to ARC21, iShares, which is the BlackRock ETF, Fidelity Wise Origin Bitcoin Fund, which is Fidelity's Bitcoin ETF. So I narrowed it down to these four. The other one I was considering was Bitwise Bitcoin ETF because of the fact that they're paying some of those fees back to the developers to basically grow the Bitcoin Foundation and support the developers. So I thought that was a nice gesture on their part, even if it means it's something that they were using to distinguish themselves from the other nine. So the third thing that I looked at before making my decision, beyond the fees and beyond the reputation of these firms and the size of these firms, was actually who was custodying the actual Bitcoin. So most of these Bitcoin ETFs are not custodying the Bitcoin themselves. Custodying means who's actually holding those underlying Bitcoin that are backing up the shares of the various Bitcoin ETFs. And we can look at this chart here, or this table rather. You can see that the majority of the Bitcoin ETFs are being custodied by Coinbase, the exception being VanEck and Fidelity. And so that was the third factor in determining where I wanted to put my money. And I ultimately decided in not putting it in just one Bitcoin ETF, but rather two Bitcoin ETFs. The reason was is I wanted to spread my risk in case something happened. I didn't feel comfortable putting all of my money in these Bitcoin ETFs that are storing the Bitcoin in Coinbase. So what I did was I used 50% of the money that I invested it into BlackRock, and its fee is really low. It was 0.25%, pretty low. They're a big name. They're the biggest player in the space, and they're being custodied by Coinbase. Then I put the remaining 50% of my money into Fidelity. And the reason for that, again, is Fidelity is a big name. They're also charging I believe, a 0.25% fee. And the big distinguishing factor was as they're self-custodying. And so I didn't want all of my money being custodied in Coinbase in case something happens to Coinbase, there's a hack or whatnot. And so I felt it was better to basically spread my money 50-50 across Fidelity and BlackRock, which are being custodied respectively by Coinbase and by Fidelity themselves. So I hope that kind of helped you formulate an opinion on where you could potentially put your money, and you got a sense of how I thought about investing my money, how to minimize my risk, minimize my fees, and go with a couple of firms that are highly trusted in the financial world. So that's the end of the video. I hope you liked it. I hope you got something informative out of it. If you did, please like, comment, share, or subscribe, and I'll see you in the next one. Take care.